Randy Gonzalez Jr. I want to welcome you to another episode of Mind to Mind. I'm super excited on this information that we're going to be sharing with you here today, and it's going to be so much value. So I'm bringing on a special superstar. So get ready, get your notepad, and let's go ahead and get to it. So without further ado, our special guest today is residing all the ways from Henderson, Nevada. Her name is Monica Centeno, and I'm going to let her actually describe a little bit about what she does, what she's doing, and how it can serve you in a major way. So, Monica, welcome to Mind the Mind. How are you?
I'm well, Randy. How are you? Thank you for having me.
Oh, you're very welcome. Just loving life, living it full throttle. So, our guests want to know, especially during this time, a little bit about the house buying, the home buying process. And I got some questions actually I got laid out for you. But more importantly, can you give our audience some feedback on who you are, what you do, what you specialize in, and then I'm going to get to my nice juicy questions for you.
Okay, that sounds good. So my name is Monica Centeno. I'm an attorney, and I'm a mortgage lender. So I work for a mortgage banking company, Direct Mortgage Funding. Celebrity Home Loans is our parent company for any of you who go to the websites and look everything up. So I've been practicing law. Well, I graduated from law school at Chapman University in the city of Orange, not far from you, in 2001, and came back to Las Vegas where I grew up and started in the mortgage business. And now I've just sort of turned that into a hybrid of both. I still practice law. I spend most of my time, though, in the mortgage business working with people that are referred to me through a network of attorneys that I have built. I'm licensed in 16 maybe now states, and help people in all those states. So everything from just your regular conventional loan to the more difficult loans where people have had some challenges and maybe they don't fit squarely in the FHA box or the conventional box, but certainly still can get a loan. So just a wide variety of different clients that I assist, and just putting together my experience to help as many people as I can.
Oh, wow, that's fantastic. So I know a lot of our listeners, what they focus on is, especially in your realm and your background, is how can I actually get a home? But I want to find out a little bit more about you, especially we've got some young entrepreneurs out there. We've got a lot of females out there. You know, obviously you're somebody that I know they can definitely look up to, and I respect you greatly as well. So
Thank you.
How in the heck did you get started in this field on doing what you do?
Well, it was kind of, an accident, to be honest. I graduated from law school in California. I grew up here in Las Vegas. Some family circumstances took me to change my plans, and I moved back home, and I knew two people in the mortgage business, and I always be, a little funny saying one wasn't very smart and one wasn't very ambitious, and they were really just doing well, and I needed to work at that time. I had taken the bar exam in California, but they only offered it once a year at that time, so I had to wait a year in Nevada to take it. And so I looked at them and I thought, well, if you can do it, I can do it. So really, I just, it was a time when you just got into the business and somebody just said, I'll fill out the form for you and now you do loans. And I really just didn't know anything. I knew that I could learn it. I had just passed and I've taken a bar exam. So I knew I could learn the material and I could figure it out. So really what I just did was made up a bunch of fake loans and started calling people and asking, can I do this? And really just sort of figured it out, and some kind people along the way really helped me and pointed me in the right direction. And after the first year I finished in the top 5 of my company. So it was a lot of hard work, but just I guess getting after it.
No, that's awesome. You're definitely ambitious in what you do, and you got a drive that definitely I see a lot of like women for instance, that they're in this type of field, and usually you see it's mostly, I think, male dominant, but I see a lot more women coming up and a lot more women. What would you tell somebody or a young woman looking to maybe do a career change and get into this field, from somebody like yourself, what's something that they can do to actually keep on the right track, so to speak?
I would say, don't give up. Truly, that in this particular business, it's changed a lot, so it's a lot more difficult. But if you are willing to just get after it and really just put in the work, you will create the habits, you will gain the knowledge, and you will be able, to really do it. It's really, 10 or 15% knowledge, and the rest of it is, are you going to do it? I tell people all of the time, there is people like to quote the scripture, the truth will set you free, the truth will set you free. And I say a half a scripture is a lie, because everyone knows the truth about how to lose weight, right? It's eat right and exercise, but everybody's not skinny. You have to do it.
Yeah.
You have to do it, not just know it. And that, I think, is the hard part, because you face a lot of no's, a lot of hard stops, and you can't do this. And it can, it's a lot of rejection, so to speak. But you just, you're just looking for a pathway through to the end to get that loan done and to drive forward. And I think that, if you have that drive and that push, and you're really willing to just do the work in this field or in any field, I think that, that is a lot of people, I think, give up a little too easy.
Mm-hmm. Yeah, no, definitely. And you're right on. You can't pay someone to do your push-ups for you, too. So, yeah.
Right. I mean, you could. Believe me, I have the best arms in town.
Definitely. So here, I'm going to go ahead and start breaking down some of our questions for you. So from somebody's point of view, and let's say if they were to come to you and they want to figure out how they can actually acquire maybe even their first home, here's my first question for you is, should I find the house first or talk to a lender? What would you suggest someone who's looking for a house in the market right now? What would you suggest?
Well, I think people just intuitively, they want to go, okay, well, let's go look at the house, right? Let's see what I can get. And I think that's just what people do, right? You go to the mall and then you find the thing that you want, and then you see if you can get the credit card. But with house shopping, it really is so important to figure out what you can afford to buy. I have seen so many people really go look above their price range. They fall in love with a certain type of house that they can't have, and they are so disenfranchised with the process and not excited about buying their first home because they've been looking at houses way above or out of their price range. And I think that if somebody is very serious about owning a home, I tell everybody can own a home. It's, like everybody can lose weight. Are you going to do the work? Right. Everybody can own a home. Are you going to do the work? Sometimes there's a little bit of credit work or savings work that you have to do. But I think the most important thing is really to get with a lender, to do the hard part first, right? The not so fun part of looking at your credit, putting all of your situation out on the table so someone like me can put all of the pieces together and say, okay, I've created the roadmap, and this is how we're going to get there, and this is what you can afford to buy. Now go look. And, oftentimes what happens is people have not seen a lender. They've not been pre-approved. They don't have a commitment for money. And especially in this really competitive market, and not just, here in Nevada and Las Vegas, but in all of the markets, really just seems everything is really kind of a seller's market right now, no matter where you are. It's so important to be able to make a move on a property that you like. You don't want to find something and then have to take 3 or 4 days to go through the pre-approval process and then find out the house that you love has already been sold to someone else.
Yeah, that's got to be a big bummer for a lot of people, huh?
It is very disappointing. And then people, they just get disenfranchised with the whole process. Then they decide that they don't want to look for a while. And it takes a while. It's an emotional process because it's emotional for someone. It's where they're going to have their family, where they're going to put their Christmas tree and have their holidays and their friends and their family. And, when it isn't what they had in their mind, it takes a while to get away from that and start over again.
Right. Okay. Well, no, that's very valuable information. So like she said, gang, take some notes. I guarantee you, get your notepad out, get a pen, start writing this information down because it's going to serve you guys in a huge way. So thank you. I appreciate that. Yeah. One of my intern was going through that same process with their family, and I guess they were looking at a house, and before they got everything situated, before you know it, then they got the paperwork situated. By the time they went to go look back at the house, it was already gone. Somebody had swiped it up. So yeah. I know firsthand. It
happened to me 30 minutes ago. I had a client call and say, I love this house. And I said, you won't be ready until July. You can't have this house. And he said, well, then I'm not going to buy any house. Because he's just disappointed, right?
Yeah. Okay.
It's unfortunate, but if you go about it the right way, it can be a very exciting process and a very exciting adventure to, get approved and buy your own house and go out and look. Yeah. I think that planning is everything.
Yeah, for sure. So my next question for you is, What is the home buying process? Can you break that down for our audience, especially for someone who's looking, kind of like a step-by-step system that they can actually do, kind of a check mark system on how it actually all works?
Yes. So, the first thing, like I said, is, to get with a lender. And, I could talk for hours. I'm not going to bore you with all of the minutia of it all. But the truth is, we are going to look at a few things. We're going to look at your credit. We're going to look at your income, and how steady and stable your employment is. And COVID has just added a whole new layer to all of that. Unemployment checks and stimulus checks, I'll say to everybody, are not income.
That's funny.
We cannot use them as income. It's a great question. And I know that you're receiving the money and it seems like, it's coming in your hand, but it is not income for purposes of borrowing for a mortgage. So you want to get the pre-approval. You want to have that pre-approval letter. And then you want to get in a car with a realtor who's going to really be able to find you homes and show you homes that you qualify for. I think it's important to find a realtor who is listening to you and understanding the needs. A good realtor is going to tell you, go drive around the neighborhood and tell me, go there in the morning, go there at night, go there in the afternoon, see what it's like around there, see if you like the shopping in the area and that kind of stuff. And then we'll find you a house over there. They'll show you houses. And typically the process goes something like, you make an offer, and with your offer, you have to give earnest money. So you should be prepared to write that check and send it with your offer and say to the seller, I am serious about buying this house. I'm serious enough that I'm going to give you this money, and you take your house off the market until I can perform on my loan and pay you for this house and buy it from you. So that's the first check that they write. The next check that they write, got to have your inspections done in your due diligence period. Usually it's 10 days, where you're checking systems. Is the air conditioning working? Is the foundation cracking? Yeah. All of these things, especially if it's an older home, you want to make sure that you're getting something where all of the systems are working and you're not buying a bunch of repairs. Essentially, you're moving in and it's the money pit. So we've also
yeah.
That's what we're trying to do.
Great movie, though.
Yeah, very entertaining.
It probably should be a requirement before somebody buys to watch that movie so they can have an understanding exactly what you're talking about. So there you go, folks. Watch it's the money pit. The money pit. That's right, Tom Hanks. Yeah, great movie.
Yeah, it is a great movie. And then the next thing that they can expect to pay for, we'll get the contract once the seller and they and the seller have negotiated terms upon which they agree. They'll send the contract to me, and I will get that loan disclosed to them. I'll tell you, I will go over all of the fees. I do that initially and say, this is what you can expect to pay. But now we've got a property, so we can tighten those numbers up. I think it's important for people to understand that in the beginning of the process, in the pre-qualification process, we're estimating numbers because we don't have a property. Then when we have a property, we have limited information until we go through our verifications, and we have also better information, but it's also estimated. We order the appraisal. The buyer is expected to pay for the appraisal at that time. So earnest money, inspection, appraisal, and then they don't pay for anything else until it comes time for closing. But the appraisal is going to tell us, is it worth what they're paying for it? It's a protection for the buyer. We're not, nobody wants to borrow, $50,000 more than a house is worth. Right? You want to know what you've agreed to pay for it. The property is worth that value. So we do that and make sure that we get appraisal conditions. Oftentimes they're very small things that, something is wrong with a report, a number, a license we have to fix. But sometimes we say, these repairs have to be made, particularly with government products like FHA or VA. FHA or VA want to make sure that the borrower, the homeowner, or the veteran is getting a property that's not only in good working order, but is maintained well. So there's some more strict guidelines or different guidelines for appraisals with government products than conventional products. And we clear all of those, make sure that they have proper insurance. We're doing our part at that time. There's a lot of hurry up and wait. Give me the contract. Yeah. Give me the appraisal. And then you just wait for me. I'm working on it. And then, they come to the closing table where we give the documents. For us, we generally will send documents and money at the same time. So when they sign, they can record and get their keys the same day, and then they become a homeowner.
So when somebody's actually going through this entire process from kind of either start to finish or start from the time they actually get the keys, probably one of the biggest questions is how long does it take?
That's a very good question. We normally say 30 days. The general rule of thumb and what we like to see is that it's going to happen in 30 days.
Okay.
The truth is, COVID has thrown a wrench into every aspect of everyone's life, including lending.
Okay.
So we have, sometimes the notaries don't want to go to their houses if they're going to be signing with a notary because of COVID. They're nervous. Sometimes appraisers don't want to go in houses, so limited appraisers. We've seen rates. They've been coming up the last week or so, but the rates have been in the twos. Everybody is, the refi boom has been on. So we've seen the biggest year in lending last year since 2003. Everything was up 30% year over year. And when it went up 30%, the business went up 30%, guess what did not happen? Mm-hmm. Appraisers, underwriters, funders, closers, processors did not increase and just multiplied by 30%. So it was the same staff handling more business. So it took a lot longer. So I would say, depending on the market and how long it can take to get an appraisal, we're looking at 30 to 45 days.
Okay.
So,
well, that's good to know, yeah, because I know obviously with the pandemic that's going on, there's going to be a lot of shifting in the time that's normally pre-pandemic on when somebody starts versus somebody closes and actually has the keys to
absolutely
kick up their feet. So, okay.
Very
awesome.
different world we're in.
Yeah, definitely. So there you have it, folks. Don't rush the freaking process. It's a process, but it might be a little bit, especially if it's your second or third home that you're buying, it might be a little bit different. If you're a first-time buyer, it's just what it is. It is what it is. Okay?
It is what it is. Just take the ride. I would say, too, as just a point of advice, when you're buying a house, don't plan to move in and sleep in your new house on the day that you're supposed to close, because recordings and fundings don't always happen in the morning. Sometimes they happen in the afternoon. And I've just seen so many times when people are literally waiting outside with a moving truck and something happens. Something like the title company is in Texas and the loan documents can't get here because UPS isn't picking up in a storm. Yeah. Or we can't get the documents from the title company because their power is out. So you can't have your house today. And you really just want to leave some time to be able to move into that house and not have to have the keys on the day that you're planning to close, because sometimes it doesn't go according to plan and it just is very frustrating and difficult.
Okay, that makes sense. I can imagine someone's ready to move in and thinking they're going to move in, like, not today.
And that happened right when COVID happened.
Wow.
Or we had, signings, and then both people got COVID, so they couldn't sign. That happened. We had somebody this week. He lost his ID, so he couldn't sign. Wow. So many things happen. He went fishing and lost his ID, and he couldn't sign his part, so the buyers can't move in when they want to.
Oh, wow.
Because he couldn't sign when he needed to, and it's going to be 2 weeks before he gets his ID, and they're going to be waiting 2 weeks.
It sounds like life.
It absolutely is life.
Expect the unexpected, huh? Okay.
Never a dull moment.
So there you go. That's awesome. Let's go to my next question for you is, what's the difference? Because a lot of times people are saying, okay, how much money do I have to have available? What's involved? So what's the difference between a down payment and closing costs?
That's a very good question. So a down payment is the money that you put down on the house. So I'm just going to use very nice round numbers. You're buying a house for $100,000.
Right.
You have $5,000 for down payment. Now that means you're not borrowing $100,000. You're borrowing $95,000 for the house.
Yeah.
Essentially, right? You've paid $5,000. That's the down payment. Closing costs must be paid as part of a transaction, regardless of whether or not even you're going to pay cash for a house. There are closing costs involved. And I like to explain to people, let's say you were going to pay cash for a house. Mm-hmm. You would still want to be sure that the Bill Smith promising to sell you this house is actually the Bill Smith that owns the house, right?
Oh, that's yeah.
So we have title companies, right? Yes. That they make sure that the person selling you the house is actually the person who owns the house and has the authority to sell that house to you. They also make sure that the Jane Doe who wants to buy this house is really you and not someone who is buying a house in your name and doing some sort of identity theft, which is prevalent nowadays. So they're checking your identity. They're also making sure that you're going to receive free and clear title, right? You're going to buy this house and you're not going to owe someone's IRS bill or back taxes or something else on the property. You're only going to owe the mortgage that you agreed to borrow for this house. So that's what a title company does. An escrow company is the neutral third party that holds money and documents. Even if you're going to pay cash, Randy, if I didn't know you and I was going to buy a house from you, I wouldn't show up with cash, right? I know someone would be mugging me. and even if nobody mugged me, I wouldn't hand you over the $95,000 in cash or $100,000 in cash and hope that you sign that deed over to me.
Yeah.
And you wouldn't sign the deed over to me and hope my check cleared.
Yeah, for sure.
So escrow is there to hold the money and documents and do the exchange when all of the requirements for the sale have been met. So that's what escrow and title does. And they record the deed in your name, make sure you own the property, all of that stuff. So that's escrow and title. Then if you also, again, in my example of paying cash, you'd still have to pay for property taxes. You would still want to have homeowners insurance on the property to make sure something you'd want to be insured if it burned down or was damaged. So that's another part. There's also they're called escrows because the bank will hold those for you and pay them for you as part of your payment. Mm-hmm. They're called prepaids. You pay some of them in advance. And they're also called reserves, right? You hold them in reserve so that when those bills come due. So there's just a few different names for what taxes and insurance are, but that's essentially you'd have to pay for that. And if you're getting financing, then there are some costs that you have to pay associated with financing. So a processing fee to process the loan, an underwriting fee to get it underwritten. You have to pay for a flood certificate. Make sure you're not in a flood zone, because if you are, you have to have different insurance to cover the house.
Yeah, definitely.
Right? You have to have an appraisal and get that done. We have to check your credit. We have to verify your employment. So those are costs that are associated with getting a loan. All of those together are closing costs. So a lot of people think, well, if I can get 100% financing or I get down payment assistance, does that mean I don't have to pay anything?
So you just mentioned down payment assistance. How does that work?
So down payment assistance is essentially where you will get assistance for the down payment. So let's just say in my example of $100,000, you do have $5,000, but you either can put it down in down payment or you can use it to pay your part of your closing costs, but you don't have money for both. We have programs now that will loan you 100% of the value of the property. So you can put the money that you have, you can pay for closing costs. Sometimes most people, I'm in the process of buying a house right now. I'm putting a down payment and I am paying closing costs. I'm paying for both of those things. So because there is a difference, people often, when they see advertisements that say zero down, that doesn't mean zero cost.
Right.
That means you don't have to make a down payment. You can borrow the entire amount of the value of that property, but you are expected to make an investment into a property that you purchase of at least or as much or more as you would invest in a home that you would rent.
Okay. Yeah, that makes total sense. So when we were talking with respect to all this information, I know one of the biggest topics that comes up as well, too, is credit. What is the credit score that one must need to get moving forward in the process? Because I know it's a big topic.
It really is. So I like to say, the difference between FHA, which essentially, you just have to be a person to get, or a conventional loan. The difference between the FHA and the conventional loan is the difference between the YMCA and the country club, right? Oh, wow. We can all go to the YMCA.
That's a great analogy.
But you got to belong to the country club.
Yeah,
right?
Yeah, no doubt.
And you have to pay your dues and you have to live in the neighborhood. And the way that you get into the conventional country club is with excellent credit. Yeah. So, the minimum credit score for conventional is about 700. 700 is the new low conventional score. Okay. That has really changed. You really need to keep your debts paid on time, to keep the amount that you borrow in relation to the available credit very low, and really build build up that credit score. FHA is going to take you all the way down to a 620 credit score and give you an interest rate that will compete with the conventional rate.
Okay.
The difference between the conventional and the FHA is that FHA is going to have a limit in every county. It's different in every county of how much they will loan you in that particular county.
Is there like a ballpark that you might have? Or
well,
obviously it's different in counties, so yeah.
It really is different in every county. So I was looking for someone in Orange County today, okay. $822,375.
Okay.
Okay. So in Clark County here, we're under 400.
Oh, big difference, yeah.
Right, so very big difference. It matters, where you're living. It's not unreasonable you could buy a house. It's not unreasonable for your area, but they've really just looked at median income in any county. Those rates are, limits are published every year. They increase every year. In December is when we get them. We just got the increase in December of last year. So the FHA will limit you in terms of loan amount, but FHA has an underwriting perspective of how do I help the citizen get this loan? And the country club loan, the conventional loan says, well, how do I make sure you're supposed to be here?
Right. Yeah.
So truly very different underwriting perspectives.
Yeah, sounds good. That's fantastic. So what I'm going to do right now, Monica, is I want to do is what we call rapid questions. So in other words, what I'm going to do is I'm going to give you one question and I want you to give me one answer for the first thing that pops in your head, okay?
It could be dangerous, but okay, I'm game.
All right, anything is open too. There's no limitations. So, all right, let's have some fun. Okay, so my first question, actually the first thing I'm going to mention is sales. One word. First thing that pops in your head.
Oh my gosh, rejection.
Oh, rejection. Oh.
Got to get over it.
Personal development.
Bible study.
Love.
God.
Food.
Delicious.
Financing.
Hard.
Credit.
Good.
Work ethic.
Strong.
Energy.
Tops.
Health.
Good.
Spirituality.
Important.
Journaling.
Very important.
Awesome. So Monica, tell everybody and the listeners where in the heck they can find you if they either have questions about a loan or if they're looking to acquire a loan. Just love to give them a chance because I know you gave so many gems on this, and thank you so much for taking your time. I know you're going to bless so many people with this information. So how in the heck can somebody find you?
They can find me by calling my office at 702-745-4525. Again, 702-745-4525. They can email me at monica@mortgagewithmonica.com, or they can go to my website, which is www.mortgagewithmonica.com, and fill out an application, and we will be in touch with them. Okay. And if I could, Randy, just say one other thing. We touched on credit a little bit, but I find this recently over and over again with people, and they just don't. There's something that I really feel like a lot of people just don't know about, and that is that people can refinance a car. A lot of people don't know that they can refinance a car. They get a car loan, and rates are really high, or they're paying in the 8, 9, 10%. If you have good credit, if you've made your payments on time, I would encourage you to contact your existing lender and just see what you can do about refinancing your car loan. $50 makes a difference. $25. I mean, I never threw a dollar out the window. They don't add to your loan balance. You won't owe any more money. But last year, when the Fed reduced the interest rate to 0, a lot of people thought that was the 30-year interest rate, and it was the short-term interest rate, and that directly impacts car loans. So car loan rates are very, very low, and it's a great way to save money, to maximize your buying power, to maximize your savings. You skip a payment when you pay it off and do that. And I see so many people with just high rates. I tell people more than I say anything else every day. I say refinance the car, refinance the car, refinance the car, and people are saving money. So, whether you're buying a house or not, I would encourage you to refinance your car if you can and save the money.
Yeah, As you see, ladies and gentlemen, Monica has so much information. I can keep her on here for hours, but I know she's got things to do. So, Monica, thank you so much for taking time. I really appreciate you and spending time with us and our audience, giving them value and definitely. And what I'm going to do, folks, for those of you that want to reach out and connect with Monica, I'm going to put all her information at the bottom of the description, so you can definitely reach out and connect with her. She has so much more to say, I know, but we're going to limit this on time. So yeah, trust me, it's like a walking encyclopedia. This was the original Google. So
I wouldn't go that far, but I have spent a fair amount of time learning some things, and I'm happy to share. And I thank you for the invitation, Randy. It was a pleasure to be here and to talk to you, and I'm grateful and I appreciate it. Thank you.
Absolutely. Thank you. Well, that's going to wrap it up, folks. I hope you guys have an amazing day. Keep rocking, keep living with passion, because you deserve it. Until next time, God bless and be great.